Nancy Tengler, CEO and CIO of Laffer Tengler Investments, joins us now. And by the way, I want our viewers to know the one-year performance of her Laffer Tengler New Era Value ETF, ticker symbol TGLR, handily beating the S&P. Nancy, we're about 57 minutes away from closing out the trade for the week, but traders don't seem to want to hit the road. We got a broad-based rally here. What does that signal to you?
Yeah, well, I think the earnings report, Liz, were so good that, investors are stepping back from the oil shock and saying, if this is, and it wasn't just earnings growth, it was guidance. So if this is sustainable, we have plenty of room to run. In the 90s, we had a S&P spread, or a PE spread between tech and the S&P of about 20 points. It's 3 points right now. So technology is not grossly overvalued, yet that's where all the earnings growth is. So I think you're seeing enthusiasm continue as we get these broad-based reports of just excellent earnings growth.
I think you're right about the guidance. Some of these companies are knocking that out of the ballpark. Some are not. I mean, you think about Walmart, which is actually one of your 6 for 26 stocks. Before we get to that, though, I do just want to quickly say, Nancy, that if you look at the markets this week, specifically the S&P up for its 8th week in a row, longest win streak since December of 2023, and then you flip it over to the VIX, the fear index, which is now below 17. It's at 16.59, showing very little fear in this market. You are still feeling that people should be long stocks, but you also say you're expecting a 10 to 15% correction. Why?
Well, because I think, we'll stop getting all the good news. Then we'll start turning our attention back to the Fed. We've got a new Fed chairman who I think is going to be outstanding, but it's possible, as has been the case in most new Fed chairman positions, that the market will test the new Fed chairman. And then we still don't have resolution in the Iranian war. So we've got the oil shock potential still hanging out there. So I think, the market's pretty fickle, Liz. You and I have both been at this for a while. So I think once we turn our attention away from all the good news, the market will start hand-wringing over the bad news. And, we called the bottom on April 4th. We were a little late, but it was just at the end of March when, it was the end of the world. So I think we'll get another pullback, and I think that will be an opportunity for investors.
And the opportunities you see right now in your 6 for 26, and some of them, we can put them up on the screen. I mentioned Walmart, which of course got hammered yesterday. I would imagine you might have been scooping up more on that pullback.
Yeah, we had been trimming it, and yes, we have taken a small step back in, but it's a pretty big position for us. The great thing about a portfolio, though, Liz, even a concentrated one, is that you can have some dogs in there and still generate excellent performance. So the 6 for 26 is up 37% this year, and that's been, the heavy lifting's been done by AMD, CrowdStrike, and Quanta Services. And Tesla, DR Horton and Walmart have not been particularly spectacular yet.
And yet you continue to do very well. I want to point out specifically PWR, which is Quanta. That's a quantum stock. Yesterday, they were all on fire. Today, we're still seeing names like Qubits and Rigetti, D-Wave, having a banger session once again. Why power PWR?
Well, it's an infrastructure play, but in our thematic portfolio, where we do own quantum stocks, we own IBM, Honeywell, and all three that you just mentioned. And I think what you need to know, again, is that whether I like it or not, the government is placing the heavy hand of selection on the quantum names and put $2 billion to work from the CHIPS Act. So ultimately, as that drives the need for power, Quanta will continue to benefit because they're building out the electrical grid. So we still like that name very much and hold it in many of our strategies.
As we finish up, Nancy, you talk about this belief that people should still be in stocks, but you are putting in some protection for your customers and for your portfolio. Tell me how.
Yeah, so we had done the same thing going into February of 2020, not because we knew about the COVID bear market, but we just felt like things had gotten too extended. So it's a simple program. We're just going to buy puts against the SPY, and that will provide the protection that's necessary if we do get a pullback, and it keeps everyone clear-eyed. And if we don't get a pullback, well, that's the good news too. So we do this every now and then. We don't do it all the time.
Yeah, it's great when you can have both of your bases covered or all of your bases. Thanks, Nancy. Good to see you.
Thanks, Liz.